Hey everyone, and welcome back to another episode of the Financially Fit Podcast. I am your host, Creighton. As always, I'm excited to be here with you all today. Man, it is a very interesting time here in America. And, I think right now it's a great time for us to really evaluate, are we on the right track of protecting our finances? Are we on track of making sure our families and the people that we love are in a good spot and that they know that we love them? And, maybe holding your family a little bit tighter, right? Because what we do know is that a lot of people are not having those opportunities. A lot of people are being separated today for various reasons that I'm not going to go into because these podcasts are not about politics. But at the end of the day, I'm a human, and I feel for the people today that are impacted due to the policies that are being put in place. So, with that being said, our episode today is about life insurance. Yes, today we're going to talk about life insurance and the wealth move nobody talks about. That's right, it's not talked about much. Our core theme today is, I think when people think about life insurance, think about death. And I think that it's a morbid topic that people are scared to discuss. But the reality is that we need to discuss it. The reality is that too many people are leaving this world a lot earlier than they should for various reasons, and that we need to make sure that our family is in a place where they don't have to take on the burden that of us being gone. And also that we can pass down wealth to our families by making sure that we do the little things right now to make sure that we are protected. It's so important. And quite frankly, I see this so often in my community, specifically people of color not having life insurance. Maybe it's because we're uneducated about it. Maybe it's because some of us are educated about it, as I should say. Um, maybe it's because we don't have the funds to do it. Maybe it's because we don't even know where to start, or maybe it's because we don't even understand it. Well, today I'm hoping that I can help you understand it a little bit better. So, life insurance isn't just about dying. It's a living strategy the wealthy use to grow and protect wealth, reduce taxes, and transfer money across generations. Let me read that to you one more time. Life insurance isn't just about dying. It's a living strategy that the wealthy use to grow and protect wealth, reduce taxes, and transfer money across generations. So I'm going to flip the script for you real quick. Okay. When most people hear life insurance, they think about death. But what if I told you it's also a financial tool? Hmm. Most people think of life insurance and they think that about death. But what if I told you that it's a financial tool? I'm gonna just pause right there because until I graduated college, I looked at life insurance as a death tool. When I die, hopefully I have some life insurance that can pass down some money. And actually, I wasn't even thinking about passing down money. I was thinking about I hope that I have life insurance so that my parents or family or whoever it is that is preceding me has the money to, or my wife, whoever has the money to bury me, right? Um, and it's far from the truth. I learned over time by having a financial advisor what life insurance is and how it can be used as a financial tool. So let's talk about the difference between life insurance as protection and life insurance as a strategy. This episode is so important for so many people because too many people either um, are underissued or sorry, underinsured or they're misinformed. And today I'm hoping to make sure that you can get insured if you're not insured and hoping that you can be informed if you're misinformed. So listen up. So the basics. We need to understand the difference between term and permanent insurance. So term, let's talk about term life insurance first. It's simple, it's affordable, it expires typically after 10 to 30, between 10 and 30 years. It's best for income replacement and debt coverage during high responsibility years. So think about if you have a mortgage or you have young kids, right? If something happens to you, this is a tool that can help bridge a gap of for your earned income lost to be able to provide money to your family or to your children to help pay for the mortgage, or maybe to help take care of your kids while if you've passed away. It's a really good tool that we all should have to make sure that our income can be replaced in case something ever happens. We never know what will happen in this world, but it's important to make sure that we have that in place. So it's no, there's no cash value. It's just coverage. So you can't take money out of this unless you can't personally can't take money out of this. It's just coverage, basically protection for if something happens, someone can be paid out. So let's talk about whole life or universal life or index universal life. So it's permanent coverage and it builds cash value. So it's obviously the more expensive one, but part of the premium goes into a tax deferred savings and investment account. So think of this like a hybrid. Think of this like a money market on steroids, right? Um, you are going to pay on a life insurance policy, and a part of the premium that you pay on a monthly basis is going to go into a tax deferred savings and investment account. Now, I have to tell you that in the first few years, you're not going to see that account grow very much. But in years 5, 6, 7, 8, 9, 10, and beyond, you're going to start to see that grow a little bit more quicker, right? That compounding growth. And the nice thing is that it's in a tax deferred savings or investment account. It can be borrowed against, sometimes used for retirement or college or business capital, which is really nice. So if you listen to my prior episode where I talked about earned income, investing, and ownership, this is a really, really good opportunity for you to build some tax deferred savings or investment that you could pull from to be able to that's liquid, where you could be able to use to build some ownership. Okay. So let's talk about life insurance as a financial strategy. So the wealthy don't just buy life insurance for death, they buy it for leverage. So I'm gonna read that to you one more time. The wealthy don't just buy life insurance for death, they buy it for leverage. So let's talk about the living benefits. Borrowing borrowing tax-free from a cash value is so powerful. I actually have a cash value life insurance policy. I've had it since, gosh, 22, 23 years old. It was one of the first things that I did. It's my first kind of, I guess, introduction into investing. And I will tell you right now that I've used that in times where maybe things got tough. I had some liquid money there. I've used it in times where maybe I needed a brand new car. I used it for a down payment, so I borrowed against it, and then obviously paying it back over time, or also have paid it back in full sometimes as well. So it's been a great tool for me. You can also use it for like collateral for a business or a real estate loan. So depending on how much is in it, you can definitely use it for collateral. Um, growing wealth it just really allows you to grow wealth in a tax advantage safe bucket, right? That is liquid. And I don't think you can ask for much more than that. So let's also talk about, as also a part of that financial strategy, from a legacy planning standpoint. So, you can leave tax-free money to your heirs, to foundations or trust. So maybe you want to have a trust for your kids. I think a lot of us hear about people that are trust fund babies, right? I would be surprised if in some of these trust fund accounts, if not majority of them, that you would not find some type of life insurance, whole life or universal life insurance coverage that had cash value that was in these trusts that was being passed down, because it's tax free. It can fund generational wealth transfer without estate tax purposes, or sorry, estate tax exposure. So, you know, it it really just provides a ton of flexibility, and I think that's the thing that I love about it. So let's talk about, when does life insurance make sense? If you're still building your emergency fund or paying high interest debt, I think you need to focus there first. This is not something that you should do if you are still trying to build your emergency fund and you are paying your interest, or paying interest on some high debt. So um, you want to make sure that you take care of that emergency fund first, because you always want to be able to have liquid money available should something happen, right? That can take care of your necessary expenses. So think about your house, your car, maybe it's daycare, whatever it may be. You want to have money set aside that can handle those things should maybe you lose your job or something of that sort. Um, and then also, like, it's just not, it puts you at a huge disadvantage if you are investing in a cash value life insurance policy and you still have a lot of high interest debt. I actually did this the wrong way. I had a lot of high interest debt in my 20s, and I went and got a whole life policy. And I was working on both, but I could have probably expedited, because I was paying, like, I don't know, 300 or so dollars a month towards my cash value life insurance policy, my whole life insurance policy. And I could have taken that $300 and put that towards paying off the debt, because the reality is that debt is increasing due to interest, maybe sometimes 20%, 25%, depending on what type of card you have, right? So you want to be conscious of that, because interest is a slow killer. Interest is a slow killer, and I should say bad interest is a slow killer. Um, if you're overinsured, not every policy is a good policy. So just making sure that you understand how much of your insurance you have. It's good to have insurance, but you don't want to have too much insurance. And I think, just making sure also, if does it make sense? Are the fees high? Is there aggressive upselling, or is it a poor fit for your goals? I went to maybe two or three life insurance agencies before I landed on the one that I work with now today. And a lot of it for me was, and I was pretty upfront about this, that me being a finance guy, I want the options laid out to me, but I don't want someone to make the decision for me, or to feel like I'm being pressured into a decision. I want you to say, here's your options A, B, C, D, and um, that allows me to take it back and go do my research and do my due diligence, and then come to my own terms about what I want to do. And I think that's important, because we hear too many times, specifically like athletes or high earning individuals, they hire these financial advisors, or they hire individuals to handle their money, and they don't really know what's going on. These people are just like taking their money and doing things. And how many times have we heard people being taken advantage of, right? So it's important for you to have some skin in the game and understand what people are doing with their money, because also that allows you to be able to sleep at night, right? Like, if something goes wrong, you can sleep at night knowing that, like, hey, I made that decision. It's a lesson that I learned. But if someone else is doing that and you have no clue what's going on, you're going to be upset. You're going to be upset because you feel like you didn't have any skin in the game. You didn't have ability to drive that. So I think, anytime there's aggressive upselling, it's probably just not a good fit. So how do you know what's right for you? You know, I think it's important to ask yourself, what are you trying to protect? Are you trying to protect family? Are you trying to protect business? Are you trying to protect assets? Once you understand that, that will kind of give you at least an initial foundation to understand where I need to go and who are the people I need to talk to, right? How much insurance do you need? Do you really need? They always say use the dime method. So the dime method is debt, income, mortgage, education. So uh, I think it's important to just really take a high level, just kind of have a high level understanding of, like, what do I actually need and what is enough, right? And then also understanding the difference between term and permanent. And those things depend on, what's your cash flow, what are your long-term goals, what tax bracket are you in? For me, part of the reason why I started my whole life was not only because, I have term and I have whole life. So the term is more so like if something happens to me um, before this policy elapses, I know that my family will be taken care of. Not only my wife, my son, but also my parents, my siblings. People will be taken care of in my life, right? But I started the whole life because I wanted to. I grew up. My grandfather and grandparents had a cabin here in Minnesota, up in the kind of the boonies, and I really enjoyed that. I enjoyed that escape from the city to just be in nature and fish and being on the lake. And we sold that back around my senior year of high school. And, I would love to have that again. I would love to have a cabin again at some point. And my whole life insurance was meant to be building a tax deferred, tax free ability for me to have a down payment to do that. So that was kind of part of my approach. I think let's maybe talk about some real world examples of like when this makes sense. Maybe a parent is using an IUL as a tax-free retirement backup. Maybe a small business owner is using life insurance as loan collateral. A wealthy family preserving generational wealth through a trust-funded policy. These are all examples of how this life insurance can be much more than just a death uh, product, but more so also a financial strategy to help you build generational wealth. So hopefully you learned something today. Hopefully you'll go out and at least get a term policy, make sure that you're protected. Once you're protected, then we can start to think about, okay, what is our overall financial strategy? But I encourage you, like I always say, you should have a CPA, you should have a financial planner, you should always have an attorney available. If you have those three things, you'll be doing really, really well to kind of protect yourself, build wealth, and then also being able to have financial flexibility. So, with that being said, thank you all for being here with me today. I am your host, Andre Creighton. Thank you so much. I'll see you again on the next Financially Fit podcast. It is not about how much money you make, the power is in how much money you keep.
You know Shaletta makes you laugh, but did you know Shaletta Brundage can also make you think and boost your business? Media personality, activist, and comedian Shaletta Brundage founded Shaletta Makes Me Laugh to celebrate and share the best of Black culture. It's a podcasting platform. You can download 10 weekly podcasts hosted by African-American subject experts at ShalettaMakesMeLaugh.com or wherever you find your favorite podcasts. ShalettaMakesMeLaugh.com is also a production house, creating broadcast-quality commercial content. And Shaletta and her team of storytellers create powerful promotional campaigns to get businesses the brand awareness they're looking for. Some of Minnesota's top businesses trust Shaletta, and you can too. Get out the word about your events and products and get in front of communities of color with ShalettaMakesMeLaugh.com. She's got the power to help your business.
To keep my home running smooth, I count on Xfinity Internet. With 99.9% reliability, we're all online at once. No slowdowns. The Xfinity app lets me manage our Wi-Fi and keep things secure. Xfinity makes it easy.